Hi, you're watching Closing Trades right here on ET Now with me, Aisha Faridi, Ajay Sharma, Vinny Motiwala in the studios, and we're down, and significantly so. We're down about over 1%. In fact, this kind of weakness hasn't come in since last week, same time, I think, when we did see that small cap capitulation take place. But today, the weakness is not quite restricted just to the broader market. You are seeing the Nifty as well fall by a good 0.6% from the day's highs itself. And we're now staring lower by over 200 points. Also keep into account that you've got a couple of crucial events. You've got the Fed meet outcome as well slated this week. And also here in India, it's a very truncated week too. So you will see sort of, skewed trading in this week alone, because the next week is only 3 trading offs. And that's the crucial time before the financial year end as well. So there you go. That's the Nifty in trade for you. TCS, of course, after that block deal, that stock is down about almost 4%. OMCs continue to see that crack. BPCL is down another 3.5%. Tata Consumer is down about 3.5%. Banking pack not really participating in today's move. IndusInd Bank, HDFC Bank, all of them under pressure as well. And then, of course, the big boys, Reliance, L&T, they as well are sitting in the red. And Ajay, I guess it's the same state for the broader market too.
In fact, today broader markets are also not attempting any rebound. There are some couple of global brokerages which have called India or called China much more attractive versus India. Manulife have told their clients the same today, and so has BofA, if I'm not wrong. JP Morgan also only goes on to say that select mid caps have just started to become attractive, but overall valuation is a challenge, and we can see that getting reflected in the markets. But individual counters, there are a lot of moves happening there. So we'll talk about all of that with Kunal, Nuresh, and some other. Nitin Raheja is also joining us from Julius Baer. Nitin, all three of you, good afternoon. Thank you so much for your time. Nitin, let me start with you. The broad view is now emerging that India, for the time being, may enter a price correction or a time correction because of valuations becoming challenging. However, large caps remain attractive. Do you subscribe to that? What is your own activity in the last, say, 15-20 days when indeed some early glimpses of correction have actually started in the market?
So, we've been saying this, in the last many times that we believe that, it's time to have a large cap bias in the portfolio. And I think because there were telltale signs of euphoria that we were seeing clearly in the mid and small caps. Having said that, we have definitely seen a correction. But when you look at the correction, to the extent that we've essentially seen them revert back to the levels closer to December. And, don't forget, this whole rally started in June, July of last year. So we've had almost a 50% plus gain last year itself. So while there has been a correction, I don't think, the correction has brought valuations to attractive levels. If you look at it anecdotally, by and large, although there might be some pockets that you will start seeing that, could sort of stand out of the pack. So we continue to believe that, large caps is the space where you should be. And we have a very large tilt towards the large cap space today in our portfolios for clients.
Right. Nitin, obviously, large cap space is what you're looking at as well. But, when you're looking at it today also, there are so many of these names that have seen a sharp fall in the large cap space. So specifically in the large cap, anything that you would look at, which sector or which specific stocks would you look at then?
So, I think one of the key areas that we are seeing is financials, right? What's happened is everybody hitherto was bullish on financials. The last quarter results came and you saw margin compression and this whole challenge of raising deposits. Now, suddenly we've seen brokerage houses turn cautious on the whole financial pack. Also in the public sector financials pack, we've seen a correction also take place across. So financials is obviously one pack which sort of stands out there. We are also seeing telltale signs of the chemical companies actually starting to show resilience in terms, and also prices of base chemicals starting to move upwards. So you've seen that. So that pack is again the other pack that is starting to look very interesting from an investment perspective. And we would keep a watch for the infrastructure space. If there is a correction out there, especially towards the power transmission side of the business. If you see opportunities come there, I think that's where one should be looking to sort of, use this correction as an opportunity to get in.
What this slip below the 21,800 mark is telling you, and when it comes to the mid and the small cap indexes, do you think that last week's pain or last week's shake-off was not the first time? We're going to see that kind of weakness come in again, perhaps?
So the one pattern which is very clear is that it's selling on low volumes. So, the volumes which were there last week when that mid-cap, so-called capitulation day happened, and the volumes thereafter in the next 3 or 4 trading sessions, the volumes for those mid-cap names is on thinner volumes, even if it's a bounce, or even if few of the mid-cap names which have gone through a further leg of correction for themselves, which generally indicates that maybe the major pain for most of the stocks which have corrected or were participating in that leg of correction, I think that seems to be out. But the pain is still left into those larger cap names, the heavy weighted sectors which were still underperforming. For example, the FMCG stocks were underperforming, and today you're seeing those classical signs where the volumes have come back again and these stocks have made a fresh swing low. Positively, the metal stocks which were doing pretty well yesterday, they have not retraced completely. So that generally indicates that the momentum is still there into these stocks largely, and maybe a couple of days of pause for these stocks, and post that we may be expecting a breakout. But I also believe that this 21,800 mark, 21,750 to be precise, is a very strong support, and I think if we manage to break below those levels, maybe the near-term trend for the Nifty could get a bit more dampened.
Okay, near-term trends seem to be more dampened if these levels are not maintained. Naresh, what's your thought coming in also in terms of the mid and small cap as well? That's not seen any sort of a relief or anything coming in on the positive side for this one, and clear pressure coming in and there. So, do you think this is going to be continuing? What are the charts for the mid and small cap?
So overall, if you look at it today, at least on the day when the Nifty is correcting 1% and the Bank Nifty is correcting 0.5%, you are not seeing a 1.5% cut on the small cap indices as well as on the mid cap indices. So that's a good start in the correction. We are normalizing. We are not seeing a sharp fall in the mid cap and small cap indices. So overall, this indicates we are getting into a consolidation mode for the whole market as such. Until now, just a few weeks back, it was all about small caps outperforming. For the last few sessions, it was large caps outperforming. But now we are getting into a band. So now 21,600 is the next price point to watch out for the Nifty. The small cap index, till the time it holds above the recent lows also, we could see this consolidation continue. So we are in the period of time where one has to be careful because a lot of stocks will not see follow-up the next day. We've seen that happen quite a few times over the last 2-3 sessions. So overall, getting into a consolidation mode for small caps as well as for large caps.
While the market may be in a consolidative mode, there's one group in the market, the Birla Group, which is making big shakes as far as all their businesses are concerned. Nitin, have you noticed the way Mr. Birla, almost, gave out the guidance for their paints business under Grasim, 10,000 crore revenue. We were speaking to Century Realty recently. They have high ambitions to be among the top 3 or 5 players in their field in India. And we all know how AB Capital is now raising capital and merging companies into itself, perhaps trying to close the discount which it trades at. One is getting a sense that, the entire group is, Novelis wants to list in the US. There is something heightened activity in that entire big, bold moves being announced. Anything you like within the Birla Group, and how are you observing this?
So, I think when you look at it, I think it's a welcome sign. Considering that, it's a group which is sort of very well respected and would, find favor with institutional investors. However, over the last, few years, it's sort of struggled from a whole wealth creation perspective. And, any effort that is being made today to sort of become a little more aggressive towards that, as well as to try and, unlock value for shareholders, I think this is all very, very positive and welcome. I mean, we've seen what has happened to the other groups who made such changes and actually unlocked values. So I think it's a good sign for the market. It also sort of, helps you to broaden the market and actually presents opportunities for investors.
Well, we are back with the latest edition of Times Now Summit. Over the years, Times Now Summit has been championing the pertinent national agenda points where India's leadership, leading thinkers and national influencers come together to define the action plan for India's progress. Themed India Unstoppable, this year we're going to be focusing on charting India's remarkable journey and its increasing influence on the global stage. So join us on the 27th and 28th of March in New Delhi and watch the who's who of the political corridors share their views. Do stay with us for all the highlights and all the action as it begins right here on the Times Network.
Right. So Nitin, I was pretty surprised about the point which you just made on chemicals. You are seeing early signs of pricing pressure stabilizing, and hence you are actually nibbling into select names. There's another pocket I'd like your opinion on, is the FMCG space, which has witnessed a lot of pressure on the volume growth and of course downtrading by a lot of a large section of consumers because of high inflation, etc., particularly in the rural side. But first, let me put some data on the table regarding how, HUL of course is at a 52-week low, but many others, how the valuations have got compressed. I'd like to speak about it with Vinny right here, and then we'll get your opinion on that entire pocket. Vinny, how has the valuations got corrected over the time?
So when you're looking at valuations overall also, when we just look at the Nifty FMCG index, last 1 year also we've seen that fall coming in from the peak, and normally when you're looking at it overall at the index level also, the range between which when we start seeing a reversal for the FMCG index comes in only somewhere around the 25 times to 30 times. So clearly as of now when you're looking at the 1 year forward PE for the FMCG index as such is at around 37 times. So yes, the lowest has been 34. Maybe if that fall continues, then after that there could be a possibility of a reversal. But clearly there are no triggers, Ajay, that we see actually coming in for the FMCG sector as well. Everyone was going on in terms of that hope having on the rural recovery. Right now, channel checks are suggesting that that's not coming in Q4 as well. Rural recovery has been very subdued. Maybe this time around that growth in volume also could be below that low single digit level that we have been seeing in the last couple of quarters. So mid single digit is out of question, but low single digit is what the expectation is coming in. Raw material prices, again, when you look at palm oil prices, that's seeing a bit of an increase coming in. Sugar prices a bit increase on that front as well. So that again concerns coming in on that front, because the deflation in raw material prices now that they were expecting has moved on somewhere to the second half of FY25 is what one could say, not before that. K-shaped recovery, that's what is continuing. So only premium doing well, mass not doing well even as of now, and Holi, Eid and Q4 something, they're not seeing a support coming in from these festive season as well. So that is a trigger, a headwind that we're seeing no positive sign coming in for that FMCG
Fair
side.
point.
Nitin, would it translate into a contra buy for you, or would you say give FMCG a skip because of what Vinny just highlighted?
No, FMCG is really a defensive play. If you believe that the markets are, going to correct in a big way, that's where you go. But otherwise, if you really ask me from a valuation perspective, especially when you look at the kind of growth numbers that have been happening out there, clearly it's not very attractive to be there. And, more so if the markets are correcting, you are going to get pockets of opportunity that are going to come in places that are seeing substantial correction. So, I'm not really a big believer of the FMCG play, especially at these valuations.
Stocks then. Battery stocks have got, there are only two battery stocks, and they've gotten corrected almost 20% from recent top. And now there's a certain section of the analysts who believe that technology could be an issue for many of these companies if they want to progress on the lithium ion side of their business. And this, after both these groups have actually invested quite a few hundred crores in the lithium ion kind of projects. Any thoughts on Amar Raja or Excite?
Sorry, is that for me?
Yeah, Nitin.
Yeah. So I think this is a place where technology is yet evolving, and Indian players are yet quite down the curve. I would probably be a little wary, and you can see that in the kind of terminal valuations that these businesses are trading at today. So, it's a sector that I would probably, even if I have to play the electric sort of conversion that will happen, I think there are better places to look at. I wouldn't, not at least not at the present moment in the Indian battery.
Right. What about the charts, Nuresh? Exide and Amara, corrective phase may continue?
So in the near term, yes, that is what it looks like. You've just given a short-term breakdown on Exide. As such, it could correct towards the 270 mark, and that could be a point of time where it could stop. Amara Raja, on the other hand, I would still avoid, because that was a stock which did not show a very strong trend compared to Exide. So for now, it's time to wait it out. The stocks have corrected 15%, but the recovery has not been swift. So I would wait it out.
That's the view coming in on Exide and Amara Raja from on the charts as well. But let's move on to an ET Now exclusive. We learned from reliable sources that Vodafone PLC will soon sell stake in Indus Towers. My colleague Cheryl D'Souza is joining in with us to give us more details on that. Cheryl, take it away.
Yes, let's put the spotlight on Indus Towers. It's an ET Now exclusive. Sources have told ET Now that Indus Towers, we are likely to see a block deal in Indus Towers pretty soon. What we are picking up from our sources is that Vodafone PLC is likely to sell stake in Indus Towers via block deal. Remember, the Vodafone PLC holds stake in Indus Towers via Mobile West, and Mobile West for now holds about 8.59 crore shares, which actually translates to about 3.2% stake in Indus Towers, and the block deal could be likely in the range of around 210 to 220 rupees per share. But also what would be very key to actually point out or to note is the fact that the Mobile West stake that they're holding in Indus Towers is actually pledged. We did write to Vodafone PLC to get their views on this particular deal. They're yet to respond to ET Now queries. And remember that post this particular stake sale, the Vodafone PLC will own about 17.85% stake in Indus Towers. So what we're picking up for now is that Vodafone PLC is likely to offload some of its stake in Indus Towers, the stake that it holds via Mobile West. And Mobile West, like I mentioned, holds approximately 3.2% stake in Indus Towers. Remember in early Feb also we saw a couple of entities offloading their stake in Indus Towers, one of them being a KKR entity also, which actually offloaded about 4.8% stake in Indus Towers, while even you had CPPIB also that actually sold about 2.14% stake in Indus Towers. So very soon we are likely to see another block deal in Indus Towers. This time around, Vodafone PLC stake held via Mobile West will be offloaded.
Okay, that's the buzz that we're picking up right now on Indus Towers. In the meantime, let's just take stock of some of the other names. Axis Capital has come out with a note on Exide, like we were just highlighting, the stock down by about 3 to 4% odd. Jefferies has come out with a very interesting note on Piramal Pharma. They're putting a target price of $170 on Piramal Pharma. That stock is actually holding up in the green. They're saying that the funding constraint is leading to order slowdown for CRO as well as CDMO firms globally. And their model, marks a 12.5 to about 30% revenue to EBITDA growth for FY25 under the base case scenario. And they believe that Piramal Pharma can actually do better than that. They're saying that the sensitivity analysis actually suggests a 15% revenue growth could drive a 45% EBITDA growth for FY25, and thereby they see upside further in Piramal Pharma right now, which is holding up 3.5%. I think the volumes as well are way higher than the 10-day average on Piramal Pharma. Kunal, let's get a chart check going on Piramal Pharma if you see this one.
Well, yeah, I think it's come back to the 200 DMA, 120, 115 was the low for Piramal Pharma yesterday or day before, and I think from there the stock has managed to see a bounce back. Now, good part about the chart so far is that the sell-off which had happened for the stock from I think 145 or 150 odd levels was on thin volumes, and now the stock has managed to bounce back, which means that this 115 odd mark which was tested in the last couple of days, that should act as a short-term support for Piramal Pharma. And I also would probably expect that the indicators would come back into a neutral territory. So right now the indicators are extremely oversold for the stock, and I think that's why you're seeing a bounce back into the stock on the back of higher volumes. Once that stabilizes, and assuming if the stock doesn't break below this 115 levels, I would believe it's a good level to buy.
Okay, that's the chart check coming in on Piramal Pharma as well. But, Nitin, I just want to know in terms of overall, what's your view on the pharma pack as well? Is that something that you would be playing as a story right now, more on the defensive side?
Oh, yes, absolutely. I think, pharma is a it's like you said, it's become the defensive sort of part of the portfolio. That's because, if you look at different aspects of pharma, if you take the generic pharma, you're seeing a shortage out there. You're seeing pricing having bottomed out there. And so that started doing well. If you come down to domestic pharma, that continues to sort of show good demand, and it's actually quite a turnaround. There was a time when generic pharma used to trade at a premium and domestic pharma at a discount. Today, domestic pharma actually trades at almost like quasi, although not as expensive, but quasi FMCG type valuations. So I think, but with growth also sitting there. So I think it's a good defensive place to be today as a part of your portfolio.
Right, Nitin, thanks very much for joining us on the show today. That was Nitin Raheja talking about the market, but there is no meaningful attempt of recovery yet, and still half an hour to go as far as the market session is concerned. Kunal, Nuresh, Kunal, how are your rest of the trading picks looking like? Would you be attempting any BTST?
Yeah, a couple of BTST names. Kotak Bank is apparently looking attractive. So that's a stock which I would be bullish on from current levels. And my expectation is that maybe we may see another 2-3 percentage points higher because of the low beta nature of the stock price. So 1800 broadly as a target for Kotak Bank, 1725 as a stop loss. Triveni Turbine has apparently made a very good bounce back. So if you look at the last 2 months of chart patterns, the stock has gone through a rally, then a 15% correction, and now it's come back to that bounce territory close to that 500 levels, which I think should be crossed quite quite soon for the stock. So would suggest a buy with 520 as a target and stop loss at 470.
Right. Naresh, what about your strategies?
So would be looking out for a buy on Bharti Airtel. The stock has been clearly showing a relative strength, knocking new 52-week highs. So expecting this to go towards the 1270 mark with a stop loss at 1215. Second is a buy on Bajaj Finance. After a really long time, the stock has started giving a short-term uptick as well as a short-term breakout and has been a major underperformer. So out here, relative strength on a day like this. Follow-up target would be 6700 plus, stop loss at 6590.
Okay, keeping an eye out on those trades. But with that, let's just slip into a very short break. Don't go anywhere. We'll be back with more updates after the break.
Pull up HDFC Bank and Bank Nifty. In the last 10 minutes, there is some kind of a rebound being attempted. HDFC Bank has come back into the green, and that will help Bank Nifty to stabilize quite a lot. But apart from that, overall market is not doing a whole lot. Devin Choksi is also joining us to talk more about markets. Devin, afternoon. Devin, there is a view emerging that this correction actually could be a corrective sideways. There may not be a massive price damage in the mid caps from here on, 15, 20, 25, 30, 40%. Whatever happened has happened, but it may not, runaway rally may not resume anytime soon. How are you approaching the mid cap end of the market now for your clients? Have you started cherry picking or not yet?
Yeah, very good afternoon.
Very good afternoon.
Well, I think most of the companies where you are seeing the price damage which is taking place, they are happening largely due to the mid-cap, small-cap saga which the market has found itself victimized in. In my viewpoint, I think this correction had to happen, has happened in some form or the other. Maybe reason can be anything, but this correction had to happen. In a way, it is a good correction, though I think it is resulting into significant amount of losses for many of the traders who bought in the mid-cap, small caps on the basis of liquidity-based push that the market was experiencing. Currently, among the frontline stocks also, some of the stocks are showing a negative performance. That is where I feel more comfortable buying into, because if these stocks, the fundamental strength that they have, in my viewpoint, I think they become buy opportunity in the current market. So yes, you are absolutely right. I think this is the time when we probably look at the companies individually and start adding them into the portfolio, particularly some of the frontline companies with a view that this price correction, which is currently happening, would probably, I think, get squared up at some point of time before the election-based rally starts, pre-election rally starts. So maybe I think month of March is going to be a washout month, as one has also seen in last 10, 12 years. This one could be a washout month, and probably I think the recovery can happen with a pre-election rally in mind, somewhere in the end March or beginning April.
There would be a pre-election rally this time because election results are mostly, the market is already factoring in, right?
That's true. I guess I think pre-election rally also would be symbolic, really, in my viewpoint, of course. But more importantly, I think given the kind of strength that the government is demonstrating in pushing forward all the reforms, whether be in election or after election, the business continues and I think continues with a great speed. So certainly those companies who have been receiving the larger orders, they have visibility for execution. Those entities who are receiving money in their hand, I think they have larger ability to spend money, and that's where consumption-based argument would, I think, come forward. So, in my viewpoint, even if I think we name it as a pre-election rally, it's still okay. I believe that I think overall the performance of the market will probably show reasonably good track going forward. And some of the large cap companies, I think, if they get corrected on the price and valuation, they may become the first opportunity to buy into the portfolio going forward.
Devin, just stay with us. I'm going to probe you on which those large cap companies are, but let me take it across to Ansh quickly and get in a snapshot of what's happening across the volume screen within F&O. Ansh?
Right, so in volume bursts, we'll start with TCS first. As you can see in the chart, stock seems to have given a good breakdown from its 5-session consolidation pattern, registering its biggest single session decline in over a year with good volumes of over three times its 20-session average volume. However, there's some good support as well at around 3,960 levels. Also, there was a news on promoter Tata Sons selling 0.65% stake in the stock. Apart from this, Piramal Pharma will also be in focus. As you can see in the chart, stock seems to have given a good breakout from its downward sloping channel along with good volumes of over 4 times its 10-session average volume. Lastly, Radico will be in focus as the stock has given good breakout from its downward sloping, a strong resistance trend line along with good volume, and it has also touched 2-week high. So keep an eye on the stocks.
An eye on all those buzzers. But Devin, just back to your large cap preferences. Give us an idea, which sector is it that you're looking at and finding value?
Well, I think the correction in the banking and financial space is first and foremost, I think, very healthy correction. I think though some of the banking financial names have started picking up today, but I still believe that I think you have an opportunity around. I think the likes of Bajaj Twins, where the valuations are becoming more attractive with every fall in the price. These companies, I think they suggest that they will probably I think, remain at the top rank of the ladder, I think, as far as the outlook and the promises are concerned on that business front. So that is one such area where or one such company, I think, or group of companies we find a more meaningful entry into. Similarly, we find more meaningful entry into auto ancillary companies because of the higher amount of discretionary spending which is happening in the OEM segment, the auto segment. We believe that I think the next in queue will be the ancillary companies who would probably be demanding further amount of re-rating or corrected valuations which have already happened in the last 2 years. They may probably, I think, get re-rated from here on. So we like that particular space as well. Continue to like the capital goods segment per se. However, I think the valuations are still at peak. So maybe in some corrective downside, if at all in future one gets an opportunity, that would be also equally an interesting one to consider into. So yes, I think selective pockets where we are selectively started to add into the portfolio some of the quality names for the long-term investment purpose.
Recently, the Adani Group has actually given out a massive capex plan in their airport division, and overall about 10 lakh crore worth of capex plan, all of that. Even EBITDA numbers, they have kind of shared that the group EBITDA targets. If one were to play one particular stock from this group, because there are half a dozen listed, right? Which one would you be most comfortable getting into, say, for the 5-year ahead?
So it would be Adani Enterprise because I think the incubation that they have been doing of different businesses, be it the road business which is being incubated, airport business which is being incubated, You have also got the renewable business which is being incubated. I think you are also coming up with the various other businesses like data center business, I think, which is being incubated. So each of these businesses which are currently being incubated into the portfolio of Adani Enterprise, I believe that at some point of time, I think they would become ready for their market journey, and thus they would probably get emerged from the Adani Enterprise and get separately listed. That's where you are likely to see the valuation unlocking taking place in these companies. So if you are looking at typically 2 years and thereafter period, these stocks, I think, could possibly, these companies within the other enterprise could possibly start showing the better amount of realization for investors. Otherwise, existing portfolio of companies, be it in the port, be it in the utility segment, they all suggest the continued gain on the existing capacity as well as I think the inorganic growth approach that they have been cultivating. So we prefer that I think the selective approach for the long term in those port business I think would probably yield better results for investors.
Enterprises, interesting choice there. Naresh, tell me, you think right now is a good entry level for Adani Enterprises?
I would wait out a little more because the stock has just started correcting, say closer to 2,800 odd levels would be an entry point. The stock doesn't look as interesting at current levels. And in the last two sessions has actually given a short-term breakdown. So not shorting at current levels, but would wait out some more.
Okay, keeping an eye on these levels also there for Adani Enterprises, but looking at the markets, nothing exciting happening on that front. But, you know, what's the dealing room chatter going on? We have some chatter around the TVS supply chain, and that's what we're going to be talking about. Sharad is going to be giving us more details on that. Sharad, take it away.
What we are hearing from the dealers is that TVS supply chain services is in focus, and importantly, HNI buying has been coming across several counters in the day's trade. Even if you look at the volumes, that is up almost 3 times its 20-day average. And interestingly, the stock is still down by more than 20% from its IPO price. And the IPO price was at 197 rupees per share. Analysts say that the entire selling pressure coming in from the employees, especially as the lock-in period has ended, is the main reason as the sustained buying is happening from the HNI category. Also interestingly, Kotak Special Situations Mutual Fund is having almost 1.35% stake in the company. But overall, looking at the performance over the last 2 to 3 odd quarters, there has been a weak performance coming in, be it the global trade business or even the network solutions business. Now going ahead, company did say that they are going to infuse roughly 250 crore rupees in 3 companies in the international expansion as well. So this is what the dealers have been talking about, and the HNI interest has increased when it comes to the stock.
Okay, thank you so much for that, Sharad. But, you know, Devin, I do want to talk about some of these proxy plays that you could say coming in. If you see real estate, infra, if all that starts doing well, the proxy plays, any of the stocks that you would be looking at in the proxy play, Kajaria, Somani, or any of these other tile companies that you would find interesting?
So entire building material segment, I think, would remain absolutely strong going forward as well. Because on one side, you are seeing a continuous construction activity happening, be it in the residential space or industrial space, or even for that matter, infrastructure space. So all in all put together, I think the construction activity or construction boom, which continues in this country for not 5-10 years, but I believe that for 25-50 years, I think we are likely to see this kind of construction activity continuing in this country. So given that situation, some of the building material players who are typical catalyst for this kind of a growth phase, I believe that I think they would have relatively good time to talk about. Maybe I think one will have to buy some of these companies when the market price gives correction. At this point of time, I believe that market has probably run up little ahead of time, giving a valuation which are I think equally steeper in some of the cases. So where probably we believe that I think we'll have to wait for a while before buying into. Those who are basically choosing an option or a proxy for their fixed deposit, then possibly I think for them the housing finance business could be I think really a good one to get into, because that is an area where you are likely to see a continued growth of around 20% on CAGR basis for next 3 to 5 years, at least in the near term.
Okay, that's the take coming in on some of those interesting ideas. Let's just take stock of where we're settling in at for the day, because definitely today has been a bit of a step back after some bit of consolidation that you saw on Thursday, Friday and yesterday as well. So 250 points lower is how we're shutting shop for the day, while Bajaj Finance, Bajaj Finserv, Kotak Bharti have turned out to be winners today. That was not quite case for the large part of the market. Kunal, your take on the Nifty Bank, and when do you think we see a meaningful comeback from the private banks returning?
I think as of now, we are just seeing the private sector banks trading into a range. I think except for maybe the likes of Kotak Bank, which is looking slight bit more attractive in terms of a breakout. There is a durable pattern for the stock. I think most of the other names are just whiling away their time and then trying to consolidate in a very narrow band. IndusInd Bank apparently has broken below the 200 moving average. So it's clearly an indication that this is one of the weakest of the lot from the entire private sector banking names. And the the likes of ICICI Bank holding up into a trading range just around the 1080-1100 range for itself. HDFC Bank is also around the 1440-1450 mark, maybe plus minus 10-15 points is what you've seen the trading range for HDFC Bank. So I think except for IndusInd Bank, which is clearly showing signs of a breakdown, as well as Kotak Bank, which is showing signs of potential breakout, I don't see any meaningful trend emerging into the large cap private sector banking names. So which means that if the markets of the Bank Nifty has to move up higher, you would need to have a breakout from at least 2 of the 3 or 4 larger cap private sector banking names. Maybe the likes of HDFC Bank and ICICI Bank could probably lead from the charge.
Naresh, you think that time is coming soon where you will see a meaningful comeback from either an ICICI Bank or an HDFC Bank? Analyze the charts of both for us.
So technically, ICICI has been showing better strength, holding above the 1050 mark. Also not far away from an all-time high. So ICICI Bank is clearly there. Then you come into HDFC Bank. Once it starts sustaining above that 1460, 1470 mark consistently, then we can confirm a trend change. But what is interesting, it's stopped falling as of now, correcting below price point. Same goes with Kotak Mahindra Bank. 1700 has been holding on. So a lot of these banking names have been showing a lot of relative strength in terms of not cracking off with the markets. And names like ICICI Bank cleared strength out there. Axis Bank also came to 1130 and then drifted lower. So would wait it out for some more time on both those banks. But overall, ICICI Bank is the first preference, and then next would be Axis, and third would be HDFC.
Okay, that's the view coming in on the banks. Devin, I want to know also in terms of some of these QSR names, what's your thought on the QSR space? Whether you look at Jubilant, Westlife, Devyani, Sapphire, anything interesting in that pack, or maybe that consumption story, maybe you don't expect to see a good pickup there?
Well, I think we do remain bullish about the entire consumption story, and I think in particular the QSR is definitely, I think, one which we would like to keep an eye and attention to. However, as the market is, I think market is probably running up much ahead of its time, I guess, and giving a far superior valuation premium to many of these companies. In my viewpoint, I think unless we learn the discipline of buying something at an attractive valuation or a sustainable valuation, I think we would be paying up, I think, significantly high amount of premium, which may not work good for the portfolio returns. So from that perspective, I think we'll have to wait and see before which I think you get some corrected price. At this point of time, I still believe that I think many of these companies are still remaining at a premium valuation, which probably needs to remain slightly more corrected, and then probably one could look into them.
Right, okay, that's the take coming in on some of the consumption themes which are looking interesting right now. Kunal, just wanted to understand, other than IT, what's looking like a weak link in this market? Because, today has been one of those first days after many days of consolidation from that last week shake-off, when you're again taking a bit of a step back and across the board, mid, small caps and even large caps.
I think it's more of sentimental damage because, for example, you can't pinpoint one of the other sectors like other than IT. There is no major sector which is showing signs of weakness. The Nifty FMCG index also, for example, we were discussing this earlier, only 2 stocks or 3 stocks are trading at 52-week lows. The FMCG index is not at 52-week low. The Nifty IT index, the likes of TCS was making new high, but the index is now below the 50-day moving average. So there are completely different divergent trends within sectors and across sectors for the markets, and I think that's why it becomes very difficult to pinpoint that which are the sectors which are lagging behind and the ones which are showing signs of incremental weakness. But then when you look at this as a pattern over the last 1 week, 2 weeks or 3 weeks or 1 month, then there's one clear trend which is emerging, that the weakness in mid caps and small caps. I think across the board over the last 2-3 months, or at least for many of the stocks, there has been a 35 to 40% cut into many of the mid cap and small cap names, which means broadly we are looking out for a stage or a point where once the mid caps and the small caps, once the correction completes by say a margin of 25 to 30% at least, for many of the names, that's where I would believe that the correction would probably end. So I think it's very difficult to pinpoint one sector which is leading the correction, but I think broadly I would sense the mid caps and small caps are one of the major ones.
Okay, surely keeping an eye on that. As of now, looking at the markets, nothing exciting surely happening today as well. Day's lowest point is what it is, just managing to grapple onto the 21,800 levels as of now for the Nifty as well. Continued fall, that one pressure that we're seeing in the IT names, IT, the top sectoral loser, down 3% as well. We have BDR, Pharma, all of them just tanking away in trade as well. What's managing to hold on to some bit of a green is when they look at Bajaj Auto on the top, making the charts of the list over there. Bajaj Auto, Bajaj Finance managing to hold on to gains as well. Naresh, I want your thoughts in terms of the auto sector as well. What is looking attractive on the charts? What is it that one should look at right now here?
So currently, all I've been saying is Maruti is the one which has been showing relative strength. The stock has broken out above the 10,000 mark, then followed by that above 11,000. And relatively, say the stock used to be 9,500, 10,000 back in 2018. So the stock has not done anything compared to what has happened with the rest of the auto pack. So that would be the first one. Second would be looking at Mahindra and Mahindra again, if it dips closer to 1,700, 1,730 levels. So that would be a buy on dips. But for now, Maruti remains the first pick, and going forward, any dips into Hero MotoCorp closer to 4,200, 4,300 would be a buy. But for now, Maruti remains the top pick.
Okay, that's Maruti, the top pick within the auto pack. Today, of course, Bajaj Finance is seeing a bit of a pickup. Oberoi Realty is holding up about 1.25%. There's Bajaj Auto, which is scaling higher by about 1.25% as well. 8,600 thereabouts is where Bajaj Auto is currently in trade. Jubilant Foods is not looking bad, about a 1% uptick there as well. And then RBL Bank as well is seeing a decent pickup in trade. That stock is well holding out as we speak right now. Of course, Eicher Motors, Hindalco are some of the other names which are relatively resilient as opposed to the other weakness that you are seeing in this market right now. Devin, we are seeing a big comeback by the entire commodity basket, be it metals, ferrous, non-ferrous, be it agri-commodities across the board. Any sensitive commodity play, either on the positive side or the negative, that you think is of, a good look right now?
If you are planning to ride the bull cycle in the commodity, probably it should be metals. In my understanding, I think the metals probably would give the first leg of a strong rally, a sustainable rally for next few years. The reasons probably is simple. I guess on one side, the world is investing heavily into the renewable alternatives. And as a result of which, I think the first level of requirement would come onto the ferrous, non-ferrous metals. That's where probably we are likely to see the higher amount of demand generation happening from the globe. On the other side, the crude oil prices by and large are likely to remain in a safe zone, as I may want to call it as. So that may probably, I think, keep the cost of energy under control. At the same time, the green hydrogen use, I think, in the production of energy for most of the metal companies would end up bringing down the cost of production for metal companies, which is structurally very positive because that should help them eventually in getting the better price realization and save them from the vulnerables of the crude oil prices to a greater extent. So these are some of the structural changes which we are observing in this entire space, and that's where we believe that along with demand generation, the cost rationalization factor is likely to help the metal commodity companies. Maybe China factor will have to be closely watched as far as I think the dumping is concerned. But overall, I think we believe that the metal should have relatively steady domain going forward from here on.
Okay, that's the entire take coming in on the metals pack. Kunal, let's have your sense as well on the metals names. Of course, you know, that big move that you saw is coming undone today, but do you think there's resilient strength?
Yeah, there's a lot of resilience and strength. So I think Tata Steel is one of the stronger ones in that aspect. So when a stock falls by, say, a margin of 10-15%, and if it manages to retrace more than 50% of the correction, which means if it recovers by 5-7% after that 10-15% correction, then I believe that that's a sign of a strength. Also, on the other hand, the stock breaks past above key moving averages, resistances, etc., then I think that's that also adds to the positivity for the stock price. So I think Tata Steel is, as of now, one of the stronger ones from the metal pack. JSPL, Jindal Steel, that's the other name which has been holding on to that 800 levels broadly. So I think even today the stock in the first half was above the 800 levels, but I would believe that that's also not the strong stock from the entire metal pack. JSW Steel is trying to find its feet back again, because after I think 2 months or 3 months of underperformance, where the stock was also at one point trading below the 200-day moving average, there is a mild pickup or mild comeback, but net I think the chart is still a bit more sluggish. So if I have to put in terms of relative strength, the order for metal stocks, I would believe Tata Steel and JSPL would be amongst the top two.
Okay, Tata Steel and JSPL is the stock that Kunal is talking about. Kunal, let's have your BTST ideas as well on that note.
So on the BTST front, Kotak Bank is something which looks attractive. That's a stock which I would suggest as a buy. My expectation is that the stock would probably come back towards a breakout of a bullish pennant formation. So 1800 as a target, stop loss at 1725. And Triveni Turban is something which looks attractive. Again, the stock has seen a bounce back today, back to that 485, 490 levels. So would suggest a buy with 520 as a target, stop loss 470.
Right. Naresh, what about your BTST trades?
So first would be a buy on Bharti Airtel, stop loss at 1215, target price of 1270. Buy on Bajaj Finance with a stop loss at 6580 and a target price of 6700.
Okay, we'll let all of our experts go on that note. Deven, Kunal, Naresh, all of you, thanks as always for taking the time out and joining in. Remember, this week is indeed a crucial one. We'll have the FOMC rate decision. I think that's something that the market is categorically waiting, especially after BOJ completely turning tide and increasing rates after a long hiatus of almost about 17 years. But let me take it across to Vinny, find out how the day today has panned out for us and what have been some of the individual movers. Vinny?
Absolutely. So seems like nothing exciting happened in today's day, because Nifty is managing to close on 21,800 levels. Day's lowest point is what it's closing at, 1% down take, 250 points almost down that we're seeing for the trade. Sensex 2 is seeing similar pressure as well, down almost a percent as well. Nifty Bank also, what we were seeing on the charts also, that too was clearly under pressure today as well, and down 0.5% in trade is what it's closing at. Yes, slightly near the day's lowest point, but off the day's low as of now for the Nifty Bank. Mid cap, small cap, that too nothing exciting happened there as well. Nifty mid cap also saw a decline of 1.3%. Small cap too similar trends. Day's lowest point is what the Nifty small cap is closing at as well. Advanced decline ratio today has been clearly in the favor of declines versus advances. No guessing about that as well. And in the Nifty50, I beg your pardon, when you look at it in terms of which stocks saw the fall, we had heavyweight Reliance Industries that was falling in trade, TCS, Infosys, HCL Tech, all these names clearly under pressure. So Nifty IT was among the pack that saw clear pressure coming in there. Other than that, we did have the FMCG names like HUL, Britannia, Nestle too also under pressure as well. So yes, that's the pressure coming in over there on the FMCG pack as well. HUL was actually at a 52-week low as well. So now we have Nifty Media, that is also among the top sectorial losers, as well as the Nifty Pharma that are also seeing a decline coming in trade as well. Let's pull up some of these individual names that were moving in trade today as well. Paradeep Phosphate, that was down and out in trade. The company has actually managed closed one of its plants in Goa, and that was the reason that we saw a fall coming in for Paradeep Phosphate as well. Obviously, in terms of TCS also, we did have impact coming in on TCS as well, keeping an eye out on that one, because overall there was a block deal that has happened. Likely seller is going to be Tata Sons, who are the buyers. That's what we're waiting out for, but 4% downtick on TCS as well. Indigo, that was the one where we saw some bit of a green coming in. We did have a brokerage note from Kotak, keeping the stock on the positive side, but okay, by the end of the day, you know, Indigo also is actually closing in the red as well. JBM Auto, that was in the mid and small cap space which managed to hold on to green. Was it still holding on to green as of now? Yes, managed to hold on to that green at the end of the day as well. Up almost 1% is what it's closing on to. But that sharper fall, you see coming in the second half of the trading session, no matter what news flow, the market is not managing to hold on to any strength, and that continues to be there in terms of the pressure on the market as well, whether the mid cap, small cap or the benchmark indices. Clear pressure coming in there today.
If you like this video, then like, share and subscribe to ET Now.